It's that time of year again. No, not Valentine's Day. We're talking about something much less romantic. Tax return season. I spoke recently with Jamie Gollenbeck. He handles tax and estate planning at CIBC, and he's giving us some tips here on how to file your return, especially with some interesting options available for those who have been working from home during the pandemic.
If you've been working from home as a result of COVID in 2021, there is, for most people, what's called the Simplified method, which is just very simply $2 a day. So up to 250 working days. If you've worked 250 days at $2 a day, that will give you the maximum $500 deduction. For other people, you'd have to do the math and calculate whether or not it's worth doing the detailed method. Under the detailed method, you calculate things like hydro, gas, other expenses of the home. And then, of course, you have to prorate that based on the amount of square footage that you're using for work. And if it's a shared space, the amount of time that you're using that during the week for work versus, using the kitchen table for actually eating.
Give me an example of who would want to maybe take the time to do the detailed method.
When we look at employees that are renting, particularly renting on a monthly basis, an apartment or a condo, the math usually works out for most people based on the percentage of space that they're renting, that the detailed method will actually work out for them because they get to claim a portion of their rent as a work from home expenses.
Let's say I've been playing the crypto market like a lot of people are. Maybe I made some money on Bitcoin or Ethereum or something like that. Is that subject to any tax?
Absolutely. In fact, the Canada Revenue actually just issued a bulletin this week reminding Canadians that cryptocurrency transactions are certainly taxable. So you might want to take a look at the CRA website. They've given some guidelines to make sure you properly report any transactions in crypto on your 2021 tax return.
And let's say finally I'm a new investor and maybe I got interested in it by buying a GameStop or these meme stocks. You know what I'm talking about. Maybe I did well in it. What should I be aware of with those equities?
Again, most equities, if you're just a general trader and an investor and buy the occasional stock once in a while, are simply treated as a capital gain. If you make a profit, 50% of that is taxable. However, if you are considered to be a frequent trader, like a day trader, and you're buying and selling with enormous frequency and you're doing this, it's almost as if you're running a business. If you're in the business of trade trading, that's when you could get caught, and all those gains could actually be taxable as 100% business income as opposed to a 50% capital gain.
The deadline for filing your 2021 taxes is April 30th, though that falls on a Saturday this year, so you actually have until May 2nd. Gollenbeck says there's no penalty for filing after that if you're getting a refund, but those who owe money, they'll be hit with an automatic 5% charge if they file late. Richard Southern, City News.